Good afternoon, everybody. This is Harmeet from Sigma Pix. Thank you for tuning in. Today, January 3rd, 2022. It's our first production of the year, and we're going to start off the year by looking at three major ETFs, SPY, QQQ, and IWM, that encompasses most of the major equities markets that are out there. So anything in between. So let's just get going. First, we're going to be looking at our SPY chart, and you know, we were in this when this whole last year when this the correction started, made all-time high, and then we were in this corrective mode that ended through this part, and we're kind of holding above this region of 473.54 and kind of seeing where we go from here. So there's a few things to be noted just quickly that everybody should understand, that we can't say that this is there's something else greater going on right now. This is a preliminary review. As you know, I go through these preliminary reviews to kind of not put myself in a situation where I think something is happening but may not be happening, or something else. So that being said, there is what I want you to focus on is this ending, where I have it at least, the ending of fourth wave. Okay, and what I am thinking right now is that this is 105. So this is the start of the fifth wave, first wave of the fifth wave. Okay, that's what I am kind of focusing on. And to say why I am focusing on this way is because it has the stereotypical first wave of first 501 excuse me, the momentum move. Okay, and then that momentum move that took out the last high. Okay, that tells me that there's something more starting above here. And can this also be the end of fifth wave right here? Can this be end of the fifth wave? Absolutely. So the reason I say that is because, again, we got through the previous highs, and it can also be broken down into an impulse. Okay, and also is stereotypical fifth wave. So now you're thinking, well, I just said, well, it has looks like stereotypical first wave, and now I'm saying it looks like stereotypical fifth wave. So they both look exactly the same in a lot of ways. They will have, so whenever you come out of correction of some sort and you have a momentum move up, the change of direction, the change of investor sentiment, you will see a very high momentum move come through, break through the all-time highs, or break through the recent highs, and get us moving north. This is exactly what's happening. And also, you will see in fifth waves is the fact that FOMO has set in. Anybody that was on the sidelines is piling into the trades because they don't want to miss out, and there is no more juice left. That will indicate the end of a wave. We'll go over some of that when we look at the IWM chart. So, but I digress from that. So what are we seeing here is, it's extremely bullish so far. I have this area kind of mapped out. Okay, and what I am thinking is that this move up, if the retracement stands, this move up to 479, if the retracement stays above 468.36 and moves up, it is extremely bullish zone. And that's why I have it all set up there, because I don't want to see it go below 468 level at all. And for now, it's holding above the last third wave, so which is a good thing. We don't know that it won't come down, because this has not formed, for at least for me, this has not formed, at least for me, a some sort of some sort of a corrective slash consolidative structure, okay? And I can't really say that third wave is actually over, because what can happen is that, you know, this could be the end of third wave, okay, right here. That's a possibility. And now we're seeing this fourth wave going in of, so it's, let's just quickly look at a fourth of 4, okay? So we can't really make out exactly if this is top of the first wave of the fifth wave, the larger fifth wave. So, you know, if it's top of this this minute wave, okay, we can't say that this has truly ended, that this region itself represents a start of the third wave from here on out. Okay, we can't say that yet. So that being said, let's just watch and see how it progresses. I would like this, if it can consolidate, you know, maybe something and give us some sort of a pattern that's recognizable, I think will be a good way to you know, start setting up for bullish trades. And that obviously, if you are familiar with these types of breakouts, you know, these are your cup and handle breakouts, going over and taking out the old high and moving north. Okay, so that's very stereotypical. What other types of breakouts that we could see? We could see a cup and handle, where handle itself is just a Darvas consolidation. It's a flat consolidation. Okay, so this, instead of making handle, is just a flat consolidation and breaks out or breaks down from here. We can't really, you know, I think this is just starting out. If this was the case, we will know soon enough which way to break, and that would be just a very simple trade to set up. If it breaks through, you know, one way or the other, and or has some sort of Wyckoff spring one way or the other, that we can look towards trading that accordingly. Okay, so just to be, you know, it's at least for me, it's in the no man's land right now. I can't really do much with it other than to watch. The trades were back here, way back here, and there's lots of different time signatures that came into play at that exact moment, and that, you know, that we saw this momentum move. For now, it's just in a no man's land. There are some targets that are up. You know, we've already went through the 476, 741, I think 480, 490, and even up to 500. I think that could be in play in the next few months, depending on how this whole consolidation goes. So there's a lot relying on this specific zone itself to see how, you know, this markets will proceed. Okay, so let's get to the next chart. The next chart, we're going to be looking at QQQs, and you know, if I had done separate videos about it, and we're just kind of continuation from that, and it's kind of in the same boat, but I am less confident about calling this an end of the fourth wave, even though I know it's in it. That's why this is in colors, because I know we're in consolidation distribution zone. Okay, that is what's happening. This is, you know, correction being occurring, but there has nothing that has confirmed that tells me that we are out of this correction. So all this is just preliminary and just kind of playing within the inner areas of what is actually happening. And for now, it's looking extremely bullish, because a few things. This, I want you to pay attention to this. This is the retracement of this level right here that we see from 377.47 to all the way to 404.58, and these levels right here representing 23.6, which is 398.18, and 38.2, which is 394.22, represents, you know, the very solid bullish retracement levels where we want to see it come in and hold support and move up. Also, it has started creating this bullish flag. Okay, so we're seeing that also. And one thing before I leave is this. I want you to look at. So this is saying is how deep the extension is from that first move down. Is it can we say it's a zigzag? How deep from here to here? So 404 to 399 to 403. This forms your stereotypical ABC. Oops, excuse me. This is your A, B, and C. So this has that quality of your stereotypical ABC of second wave, okay, which is not as complex as the fourth waves can be, as you can probably tell how complex this is versus this correction so far. That being said, we don't know how this correction would end. All we can do is make some educated assumptions and work with the probabilities that this is extremely bullish and we should see a continuation higher. Absolutely, there are possibilities that it could break down. So markets will throw you off whenever you think you have them figured out. So just know both sides of the trade, know and understand where you are within the market structure and what is the market showing you at that point. So extremely excited it went over that 33.98. I think this is very bullish that it's over 400, and I also think that this is very bullish that it's staying above that 400. And of course, the 394.22 level being also very important. Don't want to see it break that. What could, we don't know. Again, this has ended, so just be mindful. Even though there are few tickers like Tesla, Nvidia, Apple that are doing great, that are doing and holding up the markets extremely well collectively, but there are a lot of different tickers that are within this ETF that are not doing so well and have lost quite a bit of value. So that being said, let's just move on to IWM. I think we'll go more in depth of each of these from now on by themselves, just to kind of give the idea. Okay, so let's just quickly look at IWM. There's not much to say. Again, we saw this move higher that got us, had us break out of this Darvis consolidation and then immediately got sold off. Okay, so that's what I was talking about when I was saying the fifth wave and the first wave tend to have the same characteristics. Okay, the leading diagonal and the ending diagonal are pretty much the same signature wise when it comes to the third wave has to go beyond the first wave, and the fourth wave has to come within the first wave, and so forth, and fifth wave has to go beyond the third wave to make that ending or leading diagonal formation to form. Okay, and you will see lots of momentum coming in, and that shows you where things are actually picking up, or where that's a FOMO trade. So that's exactly what we saw in IWM, and it kind of failed as soon as it got up there. It failed pretty hard. Okay, the only thing that bulls have right now going for them that it did not fail that bad that it broke down through this Darvis consolidation. Okay, so that would have been I think just a great shorting opportunity from there on out for the rest of, for how long. That being said, we did complete a cycle. Okay, and from when we broke out of this Darvis consolidation, okay, this Darvis consolidation, we did complete a big cycle, and we are seeing some sort of, looks like more of a complex consolidation and distribution that I would like to see. But again, we are in this back into this zone where everything has been for the past year or so, and so that's pretty much what you have to go by. So don't make things too complicated, and just understand these are your levels. As long as it stays in there, you may decide not to play it, or you can just play the, whichever way you want to. Long's here at the bottom, shorting at the top, and so forth. But from here on out, I'm gonna have to excuse the dings. Those are um, my alerts going off for trades. Anyway, so uh, for now, I think this gap right here, 230, 226, 231, say 225, I that has to kind of we have to go through it. Let's just go back to this 1 hour chart. I think you can see it much better. We're going to zoom in into this. So this is where we are at. Okay, this is the 1 hour chart. This gap that between, let's just say 231 and 225, that has to be filled. This is anything below it is just I think would be bearish, and you can look for it to short and so forth. And if it does get above 231, I have alerts set there too. I think we can start looking for a more, oops, let's quickly change my thing. You can start looking for this rounded bottom setup again. But that being said, it would not matter if it did not get through this star risk consolidation and have a breakout one way or the other. Otherwise, it's dead money. Okay, I hope this helps. Again, if you made it this far, I will be doing these reviews. I'll be following these indices, these ETF SPY, QQQ, and IWM closely and individually on my Patreon, and they would be updated twice a week for now. So just enough to, unless we have some sort of major major move happen that we can go over. But other than that, to collect the data and just to have some sort of idea what's going on twice a week, I think we'll do them individually for SPY, QQQ, and IWM. Please sign up there, and there should be a lot of stuff coming up this year onto that specific medium. Thank you so much. Have a great day. Bye bye.